The reason why there were short sales in 2009, 10, 11, it was because there was a market crash, a surplus of properties because of bad financing. So there was too many properties, and that's why the prices went like this. Okay. So, and then people obviously owed less. Owed more than what the property was valued because they had gotten the property at this price, and now the property's valued at this price. They were upside down. That's the famous term, upside down. Today's date, what a short sale is going to mean is because, again, we're not in that market where it dipped. We're in a market where the prices are going up 8 to 10% a year. Healthy market, especially in COVID. COVID 25 to 30% went up in price. So we're not seeing a market that the prices are down. They're actually going up. But what causes somebody to get in a position of a short sale?
Welcome to Earn the Signature Podcast. And today I am your host, Karina Turcios. And I'm excited. I have a very special guest. I got the big boss, Jeremy Gomez.
How are you?
Good. And you, how are you?
It feels different being here, being interviewed by somebody else other than Gia. This is the first time actually one of the agents is interviewing me, which is great.
I'm excited.
Ask away anything you want.
Well, today I actually want to talk about short sale.
Yes.
I know a lot of people doesn't know, so I'm going to be kind of on the buyer, seller side. What is a short sale and what does it mean?
So short sale, we're going to talk a little bit today because I think this is a topic that not a lot of people know about. Yeah, I started in this business back in 2006, and 2 years later, the market crashed, and all of a sudden, all we did was short sales. Bank-owned properties and short sales were the two main things that we did probably from 2009 all the way to 2013 or so. So in simple terms, a short sale is a seller selling a home seller selling a home for less than what it's valued in today's market. So basically, they owe more than what the property is valued.
Okay. I'll make a little stop or pause in there. So let's talk about numbers just so a person understand the scenario better. So let's say I own a house for $300,000.
Yes.
What number will put me in the position of having my house as a short sale?
So if your home is valued at $300,000, okay, that means that your payoffs, what you need to clear and title, it's more than $300,000.
$350,000?
Yeah. So
Okay.
let's say if your payoffs, your first mortgage, and other payoffs, which we're about to talk about because these are very popular now and people don't even know about it, are more than what it is than what you can sell it for, that is the problem. That is what becomes a short sale, okay? That you don't have enough money or enough equity to cover all the liens or all the people or the banks and companies that you owe to cover the price of the sale. You don't have enough equity to fulfill those payments.
Okay. And there's no right or wrong answer, but what is it that you do in order to get put in that position? I know there's certain liens, certain information, but let's say I'm the seller and I have no idea. What is it that I do without me having the knowledge or without me knowing what's the reason that I got into short sale?
Got you. So there's a couple of things, and I want to just kind of go back to 2008 for 1 second. The reason why there were short sales in 2009, 10, 11, it was because there was a market crash, a surplus of properties because of bad financing. So there was too many properties, and that's why the prices went like this. Okay. So, and then people obviously owed less. Owed more than what the property was valued because they had gotten the property at this price, and now the property's valued at this price. They were upside down. That's the famous term, upside down. Today's date, what a short sale is going to mean is because, again, we're not in that market where it dipped. We're in a market where the prices are going up 8 to 10% a year. Healthy market, especially in COVID. COVID 25 to 30% went up in price. So we're not seeing a market that the prices are down. They're actually going up. But what causes somebody to get in a position of a short sale is either they got too many debts on the property during this time that couldn't fulfill that equity. So today's date, there's going to be two scenarios. If you're in an area where there's a lot of new construction, that you are trying to sell your property and there's currently in your community new construction or around the area in the vicinity new construction, you might experience to have to do a short sale if you're selling very close of the time when you bought it. So if you bought it 2 years ago, 3 years ago, and you're trying to sell, it might be tough for you because those builders, especially after COVID, some of them have to drop prices to get rid of their inventory. And they don't care if they sold properties at 375, and then if they have to get out of there and start selling properties at 330, they'll do it. So if you're the one of the people who bought at 375 and now they're selling at 330, brand new, yours is 3 years old, and now they're selling brand new at 330, what's going to keep a buyer from going new construction? Plus they're giving them closing costs. Plus they're buying them at 3.99. You're upside down. So it depends on your motivation. Is like, why do you need to sell? Is it a relocation, death in the family, whatever it might be? What's your motivation? If you can hold on to it, better. But if you need to sell that, you're probably going to have to do a short sale because of that.
Got it.
And then there's another option too. There's another situation.
Go ahead with option two, because I was going to ask you.
Yes.
I do have a lot of people that obviously on COVID time, they couldn't keep up with the payments. So obviously they need some help. And they are in a tight situation now that they forgot that they needed to pay that money back. So what will be the scenario number two?
So scenario number two, what I see what short sales in 2026 and on are going to be is there was additional debts, additional what we call liens, because a debt against your house is now a lien. A lien is an instrument to collect against the equity of your property. So is basically if you got the help, one of the main things, especially during COVID time. So during COVID time, there was a favorite COVID-19 forbearance. Forbearances that a lot of people were doing. There was HAMP, the Home Affordable Mortgage Protection program as well. Or those were in the form of modifying your loan or a forbearance. So here you are in COVID, you lost your job because you were in hospitality, you were in restaurant, you were whatever, right? An industry that was really affected. You were furloughed. You didn't know when you were going back to work, and you couldn't make your payments. So you called your bank and you said, I need help. And they would tell you, yes, we can do a forbearance act. Some did it for 3 months, some did it for 6 months, some did it for 12 months. And so what they do is that they get that money from HUD, from the government. And so they tell you, yes, you're approved for the forbearance or you're approved for the modification. And don't just think, and we're going to put it technically in the back of your loan. The back of your loan means a separate loan that was done from the government. The government takes care of them in the back end, and they continue. Then your mortgage has nothing happen. But what happens is that when you look at your mortgage statement and there's a principal balance, you have to add the other one balance that you didn't have. So I experienced in the last 3 weeks or 4 weeks, these are now coming into fruition. That's what we're talking about. This is that some of these sellers did not know they skipped 3 payments. They thought it was $7,500 and they actually owed $10,000. And then I had another gentleman that he owed over $50,000 over COVID-19 helps. And they did not know because their mortgage statement doesn't show that. The modification doesn't show that. That's a separate loan. So that can cause a short sale because now you might owe more that you actually know that you have.
Now, why will, if, for example, let's take this client of yours, they
Yes.
thought they only had to pay $7,500 or something like that. What caused that instead of them only owning $7,500 back, now they own 10, 12, 15?
The easiest reply to that is not free money. People thought it was free money, and it's not. There's going to be fees associated with that. There's going to be some sort of interest associated with that. So that's why that $7,500 that she thought she had or she forgot she had now turned into over $10,000 is because there are fees associated with everything. Okay. Again, if you need the help, you have to take it, but keep in mind that you got to remember if you took it because that is going to continue to accrue interest as long as you start selling.
Okay.
As soon as you start selling the property. Okay. So those are one of the things that I saw. And then there's another way to get more liens. Right now we live in Florida, the Sunshine State.
Yes.
So in the Sunshine State, there was a business that boomed over the last 10 years, which was solar panels. And those solar panels, again, sound great. And kudos to you if you think, if it's working out for you. But the problem with solar panels are going to be at one point is that they're going to get you an additional debt on top. And those debts, if you're going to sell in the following 2 to 5 years, are not going to fulfill the equity that you're going to have most of the time. If you bought a property in the last 5 years and you put solar panels in the last 5 years, you might be upside down because you gotta pay. You gotta pay. Is the chances of somebody taking over that loan is gonna be very slim. Very, if you're under, FHA loan limits or conventional loan limits, people are barely getting their down payment. People are barely getting their closing costs. They're not going to take on another $25,000, $30,000 debt. Not because maybe they don't want to, it's because maybe they don't get proof for it. So most likely you got to pay it off. So if you, owe 300,000, your house is valued at, 330, 340, but now you threw in $30,000 solar panels. Now you're stuck.
And I have run to that scenario. Yeah. I had a couple of sellers, one in a specific that we were ready to close, but the client only qualified for the amount of the property, not for the solar panel. So then we negotiated, and they needed to get another loan to kind of get a hold of passing the solar panel to this new buyer, and it was just going down the hill.
I haven't got one successful transfer or of a loan. The only one I had was that the lady needed the house so much, she actually got a family member, her daughter, to get a loan separately from a credit union of $20,000 to be able to pay off that solar panel. Correct. And that's the only way she can buy the house. And so, but that's very rare the case. I think sellers are educated now that they know they got to pay it, but just keep an eye on that, because if you got, again, 30, 40,000 in solar panels, we're dealing with somebody right now. They bought their house 3 years ago. And, if they were to sell without solar panels, they would maybe make $10,000, maybe 10, 15, because it's a moving relocation situation. They have to move. But now they threw in a $25,000 solar panel. So now they're upside down.
Correct. What other scenario or what else do you think the seller can make without them realizing that they're going to put you in that short sale situation? I know that there's a couple of companies that if you have equity on the property, they come and call you. Hey, you have equity.
Yes.
It doesn't matter if you have bad credit, but here we are. We can give you money in 24 hours. No questions asked.
Yes.
But what's the but?
Absolutely. So you heard of HELOCs before, home equity lines of credit. Those you remember because you get them from the bank and you can't forget because you're making a payment every single month. But there are now companies, there's a term for it called home equity partners companies that they target, not in a bad way, but they target homeowners that have a lot of equity, but they have maybe bad credit. They cannot get a traditional loan. And they offer to give them the money that they need, $10,000, $20,000, $50,000. But with the condition that whenever they sell their home, they're going to take a portion, could it be 10%, 20% of the earnings of that sale. So they become a partner, a part owner, let's say not fully partner, but a partner of your equity. And you are signing off on that because you got it. Sounds super attractive because they'll give you the 30, 40, 50,000, 100,000 that you need with zero payments. So you don't have a payment, so it makes it super attractive, but they will collect whenever you sell a house. So as the equity continues to build, the more money they're going to make because that's the way the contract reads.
So that's a good way of them making money without you having the knowledge or knowing what is it that you're doing.
Yep.
And that's why you always need someone that is professional and know what they're doing, because if it's a new realtor, Sally, I'm sorry, but if they don't know how all this works,
yes,
instead of them helping you, they're just going to say, all right, no problem. I never heard about that, but I guess just read the contract. And legally, they don't have to read the contract because they're not representing you in a transaction. They're just simply, trying to assist you. So we do see a couple of clients that have went through that situation because they just don't have the knowledge. They don't know what is it. They're not educated enough to understand how the whole process works. Now, what is it, the options that a person is going through that process? They're about to be on short sale, but they're between, I don't want to feel like I'm losing. I don't want to feel like I gave up on my family. What will be the solution for this person that is facing and going through this phase on their life?
Yeah, so there's going to be some sort of motivation for a sale. So if you're in the above scenario where either you're in a new construction area or you are with a whole bunch of liens that you need to pay off and your motivation to sell is high through the roof because, again, it could be a hardship you're going through. It could be divorce. It could be that you're relocating, or it could be many other situations. But if your motivation is high and you have to sell, then the short sale route is probably the less destructive way, because you can just throw up your hands in the air and not do anything and stop paying, and then you're going to be in a foreclosure, which is much worse for you. So I would recommend carrying up with a real estate professional and going through the short sale process. The short sale process will become like a settlement on your credit report. You can purchase again, and normally between about 3 years from when you do your short sale, depending on the loan that you're trying to get. But you are able to recuperate a lot faster versus a foreclosure, which would take 7 to 10 years before you can actually do anything again. So it's a very slight situation where you got to assess it, but I would recommend the short sale right away. Okay, pair up with an agent that knows what they're doing, because not everybody knows how to handle a short sale, especially this day and age where short sales haven't really been heard of in over 10, 15 years.
Correct.
And so if you don't know, if your agent does not know what to do, it's going to be a problem, because there are negotiations that need to happen. There are a lot of third parties that need to get involved to make sure that the transaction goes fair, that if you're going into a contract with a buyer on a short sale, that they know the expectations of what to expect during this process. Mm-hmm.
Awesome. Well, you heard all. If you are in a situation that you think or you don't know, or you just like, I don't know what's going on, I don't know if I can handle it or not, just get with a professional person. We do free consultation all the time. It doesn't hurt to talk, to know a little bit more information on what is it that is your situation in a specific, and we'll be more than glad to help you. Well, Jeremy, thank you very much for this wonderful and educated conversation.
Yes.
I appreciate it. And don't forget to like, subscribe, comment, share, do all the wonderful stuff. Leave us comments to know what is it that you want to talk about. If you have any questions or any doubts, we are here to assist you. Well, thank you very much, Jeremy, and I see you on the next one.